will talk about initially 2014. The annual report is with you, but nevertheless I'll highlight some key features of last year. As we saw before in the video, for the first time the SPI reached 7,500 points. The S&P index reached the 4,000 mark for the first time. We had the highest number of foreign purchasers in history, over 104 billion rupees. The market capitalization surpassed the 3 trillion mark. And as a market, our market capitalization now stands at 32% of GDP. And as a measure of liquidity, turnover to market capitalization is 12%. Just to give you a feel with other markets, Bombay, for example, their turnover to market cap ratio is at about 8 or 9%, whereas NSE India is at about 29 or 30%. If you look at the composition of the market, last year we had 37% of the market being contributed by local individuals, about 27% foreign, and we also had local institutions taking up about 34%, so that's broadly the composition of our market. It has changed slightly this year. The foreign component has gone up to about 30%. If you talk about how well the market has contributed in terms of the primary market, raising capital, last year we have been able to facilitate the raising of over 77 billion rupees in capital through equity IPOs, debt IPOs, rights issues and private placements. I think we highlighted the branch network. It's significant to note that nearly 21% of the turnover that is generated by local individuals come from areas outside Colombo, and I believe our branch network is helping that momentum along with the brokers. Quick slide on foreign inflows. As you can see, for the last 3 years consecutively, we have had net foreign inflows. And the good news is continuing the trend even this year, and we have seen net foreign inflows coming into the market. We had quite a bit of activity last year. We went out and did a reality show to promote investment in unit trusts. We had, after a lapse of 16 years, organized a capital markets conference in Colombo, where we managed to attract over 80 fund managers from Europe, North America and Asia. As the chairman spoke, we did launch the CDS, relaunched the CDS with a new system, and in fact we've also given an award. Again, first time we got an international award as the most sustainable growth exchange in Asia last year. On the issuer front, last year we conducted several forums aimed at encouraging companies to come into the market, to use the market mechanism. We had sessions for the software exporters of software and IT companies. We had forums for family-owned companies with SEMA. We conducted forums for SME companies together with the national chambers and the EDB. And also we had 2 regional forums for SME companies in Kandy and Anuradhapura. On the foreign investor front, we had 3 very successful roadshows in Singapore, London and New York. And each of these venues, what we found was that after the roadshow was conducted, we had the increase of investment from all 3 regions. And as a result, when we did track the turnover generated from those locations, we realized that all 3 forums have been successful, not only in encouraging existing investors to increase their investment, but we also managed to attract a new breed of foreign funds as well from those forums. Local forums, we conducted over 400 programs locally, awareness programs, and also over 289 educational programs. We partnered with a lot of professional organizations, Institute of Chartered Accountants, SEMA, Sri Lanka Institute of Directors and the CFA. And as we celebrate 30 years, if we go back and look at what the SPI was in 1985, it was at 104 points. Today we had 7,284. We had 172 companies listed. Today we have 297. The daily average turnover was just 340,000 rupees. Today we are averaging over 1.1 billion and growing. We had 15 brokers then, we have 35, so we have come a fair long way. Very quick wrap up on the performance for 2015. If you look at the graph, if we compare the performance of the first 5 months in comparison to the comparative period last year, we see that the all share price index has behaved quite similarly last year, except that last year the ASPI was at a 6,000 level, now we are at a 7,000 level. But if you do compare the two comparative periods, by and large the trend has been quite similar. If you look at the S&P, once again a very similar trend that you can observe between last year and this year, that is January to May. The good news is about net foreign inflows. If you look at the two periods, January to April this year, in 2014, in fact, for this period, the comparative period, there's a foreign outflow. But this year, we have seen a net foreign inflow during the same period. So as I said, foreigners have been getting into the market, and that's some positive news that we can convey to you. On the primary market front, once again, so far as at May, there has been 26.2 billion that has been raised through equity, debt and rights issues. We have already had 2 IPOs, equities, and 9 debt issues, and many more pending. So it is likely that we'll end up with some kind of similar number this year in terms of capital raising. We had 2 international conferences this year, as you're probably aware. We hosted the South Asian Investment Conference of the South Asian Association of Exchanges, SAFE, and we were in fact elected as the chairman of SAFE for the next 2 years. That is, the CSC took over the chairmanship. We also hosted the 17th ACG cross-trading seminar, and we had over 90 participants from 22 depositories in Asia, and had a very successful conference. As the chairman mentioned, we also launched a groundbreaking initiative, and that is to establish a clearinghouse and a central counterparty system. And at this moment, I would like to briefly elaborate a little bit on why we need a clearinghouse and why we need a central counterparty, because this probably, ladies and gentlemen, is a fairly groundbreaking initiative, as I said. I think if you go back in history, in 1990, we had our first groundbreaking initiative with the launch of the CDS. I think 97 was the next big thing that happened with trade automation. And I think I would not be incorrect if I say the next big thing that is happening is the setting up of a clearinghouse in 2016. Now, if you look at the risk in the market, our risk profile is dependent on the asset commitment risk and the counterparty risk. Right now, as you know, when an investor buys a share, the share is instantly taken out of the seller's account and then put into a buyer's account. But unfortunately, the buyer receives his money only 3 days later, exposing him to a 3-day risk. Now, globally, that's not a good practice. And as a result, if you look at the table that is given, this is a rating given by Sumrey, which evaluates markets globally, and they do ratings. We have been rated down on the asset commitment risk, the fact that sellers get paid later. And secondly, on the counterparty risk, a BBB, once again, simply because we have a counterparty risk in the market to the extent that when you buy shares, you don't really know, or when you sell a share to a buyer, you really don't know the buyer. As a result, there is a counterparty risk, and on both counts, we have been marked down, and that's why we have initiated this project to introduce DVP into our market. DVP simply means that the shares, the money and the shares are exchanged on the same day, so that when you buy the share, you have to pay the money at the same time, eliminating the risk of default. So simply in the CCP project, if you can see this chart here, currently what is on top is the process now, where when one buys shares, the shares are transmitted from the seller to the buyer, and in fact there is a counterparty risk because you really don't know whom you are dealing with, and there is no guarantee of settlement of the money. What happens when a clearinghouse comes in is that the clearinghouse will interpose itself between the buyer and seller and guarantee settlement. So the shares, once it's transacted, will be exchanged for money on the same day. The clearinghouse will come in between every buyer and seller and guarantee the trade. They will guarantee, the clearinghouse will guarantee delivery of shares to the buyer and guarantee delivery of money to the seller. In that sense, will act as a central counterparty and guarantee all trades, eliminating the counterparty risk and the asset commitment risk. And that's a key piece of infrastructure that is not there in our market, which we are trying to fix. So getting on to what we hope to do in the next 3 years, our focus will be on our intermediaries, issuers, market intermediaries, stockbrokers and investors. We also have a focus on innovation, capabilities and infrastructure building. So very quickly, we have 6 objectives that we have lined up. One is to increase the market size. Secondly is about new products. Thirdly is about increasing market liquidity. Fourthly is about risk management. Fifthly is about institutional development. And finally, development of infrastructure and capabilities. So I will very quickly run through some of these strategies that we have planned over the next 3 years. I will perhaps elaborate on 2015 only. In terms of increasing market size, we have, or in the process of completely revising the listing rules to make it easier and better for companies to come in and list, to encourage more companies to list. The process has already started. We have gone in for industry consultations. We have taken views of investment banks. We have taken views from listed companies, and now currently in the process of running it through other stakeholders and of course the regulator. We hope to add to market cap through new listings, new equity listings, and we are also taking a look at how we can rebrand the CSC board. As you know, we have a main board, we have a Dirisavi board, but we are trying to rebrand those 2 boards so as to give opportunities for the SME sector and BOI companies as well. In terms of new products, what we have done is we have set up a new products team within the CSC, and they have been working for the last 5 or 6 months on studying products that can be introduced over the next 3 years. We have now taken it to the next level, where the board of CSC last week appointed and suggested a consultative committee consisting of all industry stakeholders to meet and take this initiative to the next level, where we will start talking about specific products. ETFs, as Chairman mentioned, REITs and derivatives are much on the cards. We also hope to expand the family of indices. We now have the all-share index, the S&P 20. We have sector indices, but we are also looking at introducing new indices so as to encourage funds to be set up benchmarking those indices. For example, Sharia and certain returns in indices that other markets have. In 2016, we are also hoping to introduce the secondary trading of government securities. We are looking at regulated short selling in 2017, and that short selling will come in with the establishment of a clearinghouse. In 2017, we are also looking at introducing stock borrowing and lending. In terms of market liquidity, we have initiated a program again. Last year we did more extensive work on this, to expand the domestic retail investor base through various educational programs, awareness programs, and to expand the accessibility and to encourage stockbrokers also to go out to regions outside Colombo. We are talking actively to local institutional investors, and there are certain initiatives that are underway to encourage institutional investors to get into the market in a more active manner. We are hoping to continue our program to expand the foreign investor base. We have planned a roadshow this year in September in London and Luxembourg. We are also implementing what we call a global industry classification standard. Currently, we have a classification, we have classified companies according to sectors, but that's our own classification. But globally, there is a classification standard which is known as GICS, where companies are classified according to given sectors, and we are moving our market classification also in line with this global industry classification standard. We are rolling it out next month, and we are running parallelly our classifications as well as the global classifications, and we will be implementing it fully in January. We have also already sought the views of listed companies, got their concurrence to do this. There are certain market microstructure initiatives also that we are looking at in order to increase the liquidity in the market, and of course increasing of secondary market activity in the corporate debt market. In terms of risk management, which I did mention briefly and which Chairman alluded to in his speech, until such time the clearinghouse is set up, we have decided to implement certain interim measures to mitigate the clearing and settlement risk. We have also implemented and improved the business continuity planning. In fact, for the first time, we are carrying out in July a live test from our DR site. The first time we are doing that, we are moving trading totally to our disaster recovery site, and we are operating from there for one full trading day. So there's a lot of business BCP planning and preparation that we are undergoing this year. We have also implemented ERM framework for the exchange. We have set up a separate ERM division, and we're looking at risk in a much more focused manner. 2017 will see the implementation, or 2016, we'll see the implementation of a clearinghouse that will act as a central counterparty guaranteeing all the transactions, and will move to a DVP or delivery versus payment system. In terms of institutional development, we are in the process of building and further enhancing the CSE brand so that our market will be better known both locally and internationally. We are actively engaging stakeholders much more than before. We have regular consultations with brokers, with listed companies, with other providers like margin providers, with unit trust companies. In fact, we are meeting the Unit Trust Association next week to seek their views. And all of those discussions result ultimately in improvements to systems, improvements and new products. We are looking at the diversification of revenue streams. As you know, the exchange is fairly dependent on the income generated by the trading income, and we are fairly almost over-dependent. And as a result, we are now looking at diversifying our revenue streams by reclassifying our sale of information. We have come up with some new packaging for the sale of information. We have repriced some of the listing fees, and also we have introduced certain new services by the CDS, corporate action services, which is bringing in additional revenue as well. And the fourth part would be through the introduction of new products. We are also aggressively going on a strategy to build knowledge within the organization. We are, for the most part, a knowledge-based organization, and we have been concentrating over the last year a lot of training and upgrading of skills within the exchange and recruitment of more skilled personnel. So we are overall building the knowledge base that will help us to take the exchange to a different level, particularly in light of the plan that we have for new products. 2016, we're looking also at the demutualization of the exchange. We have already commenced the process firm of consultants has given already a project report on the demutualization, and that report is now before the regulator, and it is likely that some of the regulatory measures will be taken in 2016. So our ambition is to be a world-class exchange, to achieve the status of a world-class exchange. There is no certification given by anybody as to a world-class exchange, but if you put your infrastructure right, if you put your market size right, if you put your market liquidity right, if you get new products into the market, and if you develop your intermediaries, then you become a world-class exchange with a world-class standard, and that's what we aspire to. Very quickly on building some of the infrastructure capabilities of our market intermediaries, we are going to introduce a capital adequacy ratio for stockbroker firms, replacing the existing net capital that they have. The capital adequacy ratio was in fact approved by the CSC board last week, and we will now talk to the regulator, and it is likely that this will be implemented in the next couple of months. We are supporting market intermediaries through skills development and training. We are also hoping to facilitate introducing IPO applications using the internet, so that in an IPO you needn't send the form in, you can electronically apply either through your mobile phone or through the internet. We are looking to launch a book building process for IPOs for companies, and the rules already have been developed, and that's now before the regulator. We are also hoping to introduce IPO applications based on a block account, where they can directly debit the bank account, and that system also is being now discussed with the banks. We are looking at also introducing some electronic platforms and e-services for listed companies, for example, electronic voting. We have also implemented a project to improve the back office systems of brokers together with the member firms of the CSC. Already the 4 selected vendors have started signing up with the broker firms, and it is likely that during the 4th quarter of this year we will have all of the brokers replacing their back office systems and introducing new order management systems that will enable them on one hand to do proper risk management and also to facilitate the setting up of the clearinghouse. Then we are also hoping to introduce a new web portal for corporate actions and for company announcements of listed companies. We are trying to give them a standard template so that they can directly upload their information to the website, therefore making the information more timely and accurate. Then about infrastructure and capabilities of the CSC, certain efficiency measures that we are hoping to take, and I would just like to focus on a couple. One is that we are enhancing the information security. As you know, we do a lot of work through the internet and online, and there are threats, and we are very aware of it, and we have taken measures to strengthen the information security network. We are upgrading the surveillance system. We are currently using the surveillance system of the National Stock Exchange of India. We are doing an upgrade that will be completed end of May, and we are looking at a further upgrade towards the end of the year. And finally, about the rebranding of the CDS. We have completely rebranded. We have started the process of rebranding the CDS. We want to make the depository something very different to what it was. One of the first depositories that was set up in 1991. We started replacing the technology. The CDS has gone more international now, and also in the process of introducing new services to listed companies to make the process far more efficient than what it is. So in conclusion, our vision is that we like to be a market with multi-asset classes. We like to be a market which has fully fledged market makers in operation. We like to see an active and liquid market. We want to see ourselves as a profitable listed company someday after demutualization. We like to also be classified as an emerging market. As you know, we are classified as a frontier market right now. But if we get all of those measures that we spoke about right in the next 3 years, we can look at being reclassified as an emerging market. And of course, to increase our size, we are at about 24 billion US dollars. We are striving to see whether we can get to 50 billion US dollar market in the next 3 years. So with that, gentlemen, ladies and gentlemen, I'll conclude the presentation. Thank you.